Hola, buenos dias. Welcome to the inaugural episode of our webinar series, Tales Beyond Borders, Decoding the Investment Climate in the US and Mexico. I'm very excited to kick off this collaborative series between Prager Metis and Guerrero Santana. Today's discussion explores a dynamic investment landscape spanning the United States and Mexico, focusing on three key areas: cross-border investment strategies, US and Mexico political and business landscape, and the USMCA Six-Year Review. I'm Diane Walsh, Chief Marketing Officer of Prager Metis, and I will be your moderator for today. Joining me are Ulises Ruiz, Principal in charge of International Tax Services at Prager Metis, Sergio Guerrero Rosas, Managing Partner of Guerrero Santana, and Mauricio Ramos, Consulting Director at Guerrero Santana. Ulises, would you like to kick us off with a quick introduction?
Yes, good afternoon. My name is Ulises Ruiz. I'm the principal in charge of the international tax practice at Prager Metis. I have over 25 years of experience in international tax, consulting, and compliance, working with several industries, working with high net worth individuals, and specializing in international tax.
Great. Sergio?
Hi, thank you. Thanks very much for the invitation. Yeah, I'm Sergio Guerrero, the managing partner of Guerrero Santana, also the founder. We are a Mexican international law and accounting firm. We have been serving our clients since 21 years and helping them to expand their business in cross-border between the United States and Mexico. So thank you for the invitation.
Great. Mauricio?
Hello, good morning. Thank you very much for joining us and for the invitation. My name is Mauricio Ramos. I'm Consulting Director at Guerrero Santana, and part of my responsibilities include helping our international clients with their operations in Mexico and our Mexican clients with their operations overseas. So for the past years, we have been helping our clients navigate cross-border issues.
Great. So let's dive in with the overview of the current North American investment climate. Ulises, what is happening with the trade agreement between Mexico and the US, and how does it affect investors?
Yes, the USMCA that was negotiated and entered into force in 2020 has an expiration date after 16 years. And there's a provision that provides for a 6-year review where at the ministerial level, the countries are going to meet and they are going to discuss whether to continue the treaty or not. They can discuss any issues that have come up recently with the treaty, and they can decide if they want to continue with the treaty or not. If they decide to continue with the treaty will continue until 2036. And if they don't, then they will be meeting once a year to review and discuss issues until 2036. And in that case, the treaty will end that year unless there's a renegotiation. So this provision is different from provisions in other trade treaties, and it has the purpose of keeping the treaty up to date. And it really provides some leverage to address issues. All the member parties to the USMCA have some issues that they wanted to change, adjusted, or clarified. And this 6-year review is going to be very important in order to solve some of the current disputes and some of the current issues that are facing the three countries that are members of the USMCA.
Great. So what are the main benefits of the USMCA for companies for both sides of the border? And how could they be affected with this review?
Yeah. Well, the USMCA helps businesses to lower tariff and also to connect the supply chains, help them to access to a better market. And of course, they try to protect more like trademarks and intellectual property. After the review, there are become some changes, the companies will face maybe they will have to adjust some of their compliance rules with labor, with environment. And of course, they will have to change how the market access is going for them. So they have to be very careful with the changes and be sure how those changes will affect their cost.
Okay, great. So how does that, how does a review of the USMCA influence the automotive and manufacturing sectors? And what should investors consider with that?
Well, the automotive industry in Mexico is very important. I think Mexico is now the number one, the country number one that is exporting out cars to United States. So the main thing is that they need to comply with a lot of standards of labor rules. So if these rules become stricter, they will need to adjust and be very careful about the cost of manufacturing the car.
Great. What role do new global trade, such as sustainability and digital trade, play with the USMCA review? And how should companies adapt to that?
Want to answer this, Mauricio?
Yes, sure. So sustainability and digital trade has touched or is advancing in all aspects of life in all industries, and the USMCA is no different. All companies need to increase their sustainability effort, but also part of what the USMCA is doing is making sure there's a consistent framework across all three countries. So part of the impact is that companies, for example, on the Mexican side, need to comply with more stringent environmental and sustainability rules. And the same goal with digitalization. With digital trade and digitalization, there's a lot of transfer of information, which is not physical. It's more difficult to control. So there are more safeguards put in place to protect that.
Great. So let's shift gears a little bit. Ulises, can you give a brief overview of the U.S. economic policies? And
Yes, first, some of the provisions of the tax reform from 2017 are going to expire at the end of 2025, and the estimated cost of these provisions is around $4.6 trillion. And there are different views as to how to handle these changes. These changes are already enacted, so nothing needs to happen. Congress does not need to do anything for these changes to take effect. On the one hand, there's a proposal by the Republican Party to continue and make permanent these provisions that are expiring, and the Democratic Party is proposing that this making these changes permanent, it's something that needs to be paid with some tax increases on the other side. So this is a very important situation for taxpayers because everybody is going to be affected. If you are an individual, your income tax rate can increase from 37 to 39.6%. If you're a business, you may be facing less credits. If you are a pass-through entity, the qualified business deduction may disappear for you. And for high-net-worth individuals, the state tax exemption could be reduced from over 13 million to a little over $6 million. So everybody needs to be aware of these potential changes and start working under the assumption that these changes are going to happen in order to be prepared for the new tax rates. There are several things that can be considered by taxpayers. On the other hand, we have elections in November, and there are different proposals. The Democratic Party is proposing to have a 20% income tax rate for corporations, while the Republican Party is thinking about a 20% rate, so 1 point reduction, or even a 15% rate for companies that manufacture their products in the US. When it comes to trade issues, the Republican Party is proposing a 10% duty on everything without exceptions, and a 60% duty for everything coming from China. So these changes that are being discussed in the campaign trail obviously are going to affect businesses in a very important manner. And finally, we have another event, that's the debt ceiling. The debt ceiling was suspended a couple of years ago because the parties could not reach an agreement on how much to increase the debt limit for the government. And this provision will end in January next year. So Congress needs to reach an agreement on the debt ceiling in January or before January, or otherwise the US could default in its obligations. And all these negotiations of the debt ceiling, the tax cliff, and the political campaigns obviously come together. We're expecting there's going to be a lot of activity and a lot of negotiation of tax changes and trade provisions during 2025.
Okay. Wow, that's a lot going on.
Yes.
Great. So let's move on to the Mexican political landscape. Can you tell us about the new administration with Ms. Claudia Sheinbaum's recent victory? What changes in economic policies can we expect from her administration? And how will they affect companies?
Well, with Ms. Claudia as a new president of Mexico, we can expect that they still focus in social inclusion. They will expand in the social programs because she comes from the same party that Mr. López Obrador. So she will likely continue with big infrastructure projects and renewable energy. However, they want to keep a strict control in the energy reform. They might want to keep the control. As you know, here in Mexico, we are just voting the new judicial reform, which the main issue is that we are losing maybe the institution. The executive is getting more control with this reform. So all the investors and business have to be aware of these changes. So hopefully the government continue with the open economic reforms that keeps the economy moving in Mexico. So regarding the tax reform, it might be likely that next year they don't change too much the tax raises, but maybe in the second year we expect that the government keep with a lot of enforcements to comply with the law, and they will try to collect more taxes, of course.
Right. So that's great. Thank you so much. How is the near sourcing or near shoring trend impacting Mexico, and what industries are likely to benefit? And what is near sourcing?
So near sourcing and nearshoring are two closely related terms. Near sourcing refers to moving manufacturing closer to the end producer, to the end consumer, to whoever is going to buy the product. And nearshoring refers to moving all kinds of operations, not just manufacturing. So if we could use the typical stereotypes of an example, near sourcing will be moving a manufacturing plant from China to Mexico. And near sourcing would be moving, for example, the call center from India to Mexico, if we're talking about the US. Near sourcing, which is the moving of manufacturing facilities closer to the consumer, this one has had a very significant impact in Mexico in the manufacturing industry for a number of years, especially since NAFTA came into place and now the USMCA. Manufacturing grew a lot in Mexico. This has allowed Mexico to become the #1 trading partner of the US. Now it's above China. And it's all kind of manufacturing. It's not just automotive that we mentioned. It's very important, but it's also aerospace, health, consumer electronics, all kinds of manufacturing. So there's been a lot of benefit from that, mainly by the close proximity in geography. Now, near shoring, that's taking a different step. It took a little bit of a back step. We do speak a different language, so that's why English-speaking countries like India have become the main options for offshoring. But now a lot of that is coming back to Mexico, or is moving to Mexico. Many of the services industries, software development, IT support, consumer service, etc., has been moved to Mexico. there's an increase in talent in Mexico. There's an increase in the level of language that Mexicans speak English.
Mhm.
There's an increase in the number of college graduated professionals. So the level of service has been increasing, and this has allowed the nearshoring to take a bigger role in the case of the trade relationships.
Great.
Yeah, and one thing is that we see that companies can save a lot of money moving
Mm-hmm.
those kind of services to Mexico because of the cost of the labor hand. And
Mm-hmm.
so I think Mauricio explained perfectly the difference between the two.
Nearshoring and your sort of thing.
Yeah.
What regions of Mexico are experiencing, the greatest growth? And how are they preparing for the economic development in the future?
Well, the most, let me say that Jalisco and all the Bajío area, they are growing a lot because there are a lot of automotive manufacturers there. There is Toyota, GMC, another, I mean, Ford, all the major manufacturing cars are there. So the supply chain there is getting a lot of moving, and they are becoming with more automatization, and they are using AI tools. So, I mean, these areas are growing up a lot. Also in the north, in Tijuana, because of the location, they are closer to the border to the United States. So that gives us a very good advantage to provide all these new products to United States.
Great. So with what new taxes? Let me start that again. Sorry. What new taxes or economic policies could be introduced after the elections, particularly in relations with the tax reforms and the energy sector?
Well, I don't see in the near future a new tax regarding this sector. I know, Mauricio, you
It
have a different opinion.
It hasn't been announced, and
Okay.
I think it's to be expected that they're going to probably wait a little bit to show new taxes.
Mhm.
The focus is probably going to be more on enforcement rather than new taxes or higher taxes, which is something that we have seen happen in the past.
Gotcha.
Yeah, maybe in November or December, with the Congress and the budget for the next year,
Mhm.
we will know if they are putting out a new taxes or new regulations. Normally, the Mexican government, they put so many rules besides the laws. So we will have to be very aware of this.
So how can Mexico's political landscape and its economic policies impact economic relations between the US and Mexico, especially in trade and investment?
Well, it is clear that it has had an impact. There was a recent publication by the Wall Street Journal that explained that approximately $35 billion in foreign investment has been put on hold, just to wait to see what happens.
I mean, that represents almost the investment of a full year, no?
Yeah, that figure is close to the foreign direct investment in Mexico for 1 year. So yes, it's not an insignificant amount, and this is money. It's not money that is not going to go into Mexico, but it's being put on hold, which means people or companies are waiting to see more clarity. So it's undeniable it has an impact. However, the same thing goes on the other side. So Mexico knows that we need foreign investment. Mexico knows that the US is our biggest trade and commercial partner. So it's I don't see them jeopardizing that relationship to a great extent. Even with López Obrador, that is a very leftist government, there was a lot of foreign trade. A lot of companies moved into Mexico. There was a large number of investments from foreign corporations. So it's I don't see a scenario where that will change significantly.
Yeah, we see that foreign investment still comes to Mexico. I mean, every week we receive a new company asking us for information, for planning. I mean, Mexico keeps being very attractive for Canadian and US companies.
So let's switch topics a little bit and discuss cross-border investment strategies. What are some of the key tips for navigating the changing investment landscape in North America? And what are the specific sector opportunities that lie ahead for Mexico and the US?
Well, the main sectors have been the usual suspects, the one we talked about, automobile, manufacturing in general, etc. So we see those continuing to grow. But as mentioned before, services, and in particular, one that we haven't mentioned that is growing recently is the healthcare industry. Everyone knows how expensive healthcare is in the US. Private healthcare is there's no universal coverage. Insurance premiums are skyrocketing, and again, putting that in hand with the professionalization of the Mexican professionals, in this case, doctors with a level of English, there's a number of medicine professionals that are catering to the US market. There's a number of expats communities in Mexico, and there are doctors that cater for the expats, so they know how they can be treated, they speak the language perfectly, etc. But also there's operations, clinics, even hospitals that most of their marketing is done in the US. For a medium to large procedure, financially, it makes sense to take a plane, go to Mexico, go to the procedure, get the procedure done, and fly back.
And one example is Los Cabos, area where a lot of Americans or Californians people go to there, and they take a lot of the different programs, medical programs there. So
yes, for example, there's the case of a dental practice in Los Cabos, and most of their clients are US citizens. While they are on vacation in Cabo, they take advantage of.
Yeah,
why not? Right?
Exactly. So this is it's not like a back office consult doctors in a shady area. So these are very well put clinics and hospitals.
Yeah. So could you give me some examples of successful cross-border investment case study or that kind of thing? What's worked? What have you seen that's worked so far?
yeah. So you want to start with? Yeah, I mean, we have seen a lot of companies that move their financial or human resources or different areas to Mexico, and they just can hire the people with a good preparation, good skills, and they are saving a lot of money. We just receive a technological educational company that they hire like 100 Mexican technicals, and they move all the operation to Mexico, and this has been very successful for them. So this is a very clear case of the benefits and the success case that comes to if you move part of your work to Mexico.
Yeah, but it's not just large companies. I mean, this example, they had 100 IT professionals. Not all companies has a workforce of 100 just in IT. But there's also examples in medium or smaller firms. For example, one of them is a solar energy company, and what they did is they moved all of their administrative back office to Mexico, but also their engineering to Mexico. So what allows them to do, obviously, the installers are still in the US, and the marketing is still done in the US, the door-to-door sales. But all of the engineering projects are done in Mexico, and this helps them because it is cheaper, but also it's still close proximity. Sometimes the engineers need to travel to the site to review it physically, and it's cheaper to fly from Mexico than from India, etc. But it also works the other way around. I mean, most of the times, US companies want to move to Mexico to take advantage of lower costs. Mexican companies try to go to the US to take advantage of a larger market and a more affluent market. So we've also seen the cases of companies, for example, a consumer goods company in Mexico, very successful, has presence all over the country, and now they're expanding into the US. So now they've got a warehouse in the US, they started their company, and being in Mexico, that allows them to keep most of their inventory in Mexico, but it's still close in time and in space to start selling in the US.
So what are the Mexico and US views on OECD pillars 1 and 2? And what are pillars 1 and 2?
So pillars 1 and 2 are two projects developed by the OECD, and both Mexico and the US are members of this organization. Pillar 1, it's a project to create new taxing rights that will apply to economic activity that creates profits in a country without having a local presence, like the digital economy, although this is not limited to the digital economy. And Pillar 2 is the creation of a global minimum tax that will apply to all the country members and the additional countries that have joined what is being called the inclusive framework. So the view of the US on Pillar 1 is not very good. It doesn't have a lot of support because many US multinationals will be affected by Pillar 1 if other countries have new taxing rights on companies, big tech companies that make money in other countries without having a local presence. And in the case of Pillar 2, the US has already implemented the GILTI tax, and the US is following the negotiations at the OECD level, but I think that many people in Congress will prefer if the OECD will adapt to the GILTI rules rather than the US adapting to the Pillar 2 rules, and there are differences between the two sets of rules. In the case of Mexico, we haven't heard much from the government. In the case of Pillar 1, there has been no activity. Some countries have enacted digital services taxes in case Pillar 1 fails. Mexico has not done so, and there is no there's no activity with respect to Pillar 1 in Mexico. In the case of Pillar 2, we don't have any official announcement from the government. Apparently, Pillar 2 will be implemented after 2025. We may want to see what happens with the budget that is due on November 15 in the case of Mexico. But if not, then the OECD Pillar 2 could be implemented sometime in the future. But nothing is certain and nothing has been announced in the case of Mexico.
Okay. Great. So let's wrap up a little bit. Do we have key takeaways from what we've discussed today?
Okay.
Yes, in the case of the US, we have the tax cliff, the debt ceiling negotiation, everything coming in 2025, and we have the elections, and all that creates a lot of uncertainty. There are a lot of tax changes that have already been enacted, and there's probably going to be a lot of discussion and negotiation in Congress with respect to taxes. So everybody needs to keep abreast of developments and continue following up our series on US and Mexico.
Great.
Yeah.
You guys have
Mauricio,
any
I mean,
key-
from a cross-border perspective, I think the USMCA will continue helping both countries to increase the economy. Of course, companies have to be very aware of these new changes, because with this review, I think it will balance some things. So if new regulation comes more with environmental aspect, labor and security, digital information, they have to be very aware to be very careful with all the cost of the products. And of course, the objective of the agreement is to continue with the business between both countries. And also, in my opinion, will continue and will help both countries.
So it's undeniable that we are going to continue to be neighbors, and that all companies, all industries are going to want to do better. That means either higher sales, lower costs, etc. But it's also undeniable that taxes, regulation, laws are going to continue changing. So this is why we need to keep a close monitoring on the situations. This is why we need to come back and revisit, because something that is done or said today could change in the next 6 months, 1 year, 6 years, etc. And as always, local advice is should be adhered to.
Great. Well, we want to open it up to everyone to ask questions as well. So please take a minute to ask any questions and type it into the chat. And yeah, let's keep going. Okay, welcome back. We have received a few questions that we want to ask you guys. I've heard conflicting information about the labor costs in Mexico. Some people say that it's really cheap, and others that Social Security is expensive. What is the reality?
Well, the reality is somewhere in the middle. It's actually both. Labor costs, it is cheap. Salaries are lower. It is true that our Social Security costs are a considerable expense when considering the gross salary. So Social Security and benefits are 35% of gross salary, which is quite a few. Termination costs are typically 3 months of salary wherever you are in Mexico, so we don't have at-will employment. However, even considering that, salaries tend to are considerably lower than the comparable in the US.
Great. Another question that came in: are there restrictions on foreign ownership in Mexico? Can I be the sole owner of a corporation in Mexico, or do I need a local partner?
No, I mean, go ahead, Mauricio.
Well, I mean, there are certain, with the exception of certain key industries, there are no restriction in foreign ownership. So foreigners can own corporations in Mexico. We don't have sole proprietorship, so you cannot be a sole owner. But there's no limit on the shareholding proportion, so it can be 99% and 1% shareholding, and both shareholders can be foreign.
Yeah.
Great. Another question from one of our listeners, viewers. I want to buy a house on the beach and use Airbnb to rent it some of the time. Is that possible?
Okay,
I want to do that, actually.
Yeah.
Come for me now.
I mean, there is a restrict zone in the
Mhm.
beaches on the border which foreign can own the property directly. So the most common is that they set up a trust. No? But if you have to plan to rent the house, it might be better to set up a Mexican corporation in which as Mauricio mentioned, the two owners can be a foreign people, and then you can put the shares of the Mexican corporation in your American trust. So you can have the property of the land through the Mexican corporation. And then if you are going to have income for renting the house, since in the tax field, it's better to regulate or to manage the taxes through the Mexican corporation than the trust. So we advise a lot of American and Canadians that buy these houses in Los Cabos or in La Riviera Maya. So sometimes it's better to set up a Mexican corporation because at the beginning you just buy one condo, but then you want to buy another land or another condo. So it will be better sometimes to set up a Mexican corporation, but it depends the case. We have to study, but of course we can help you with that.
Okay, great. Is there anything that taxpayers can do to prepare for the tax cliff considerations, considering the different views on taxes? Like this one is for Ulises.
Yes, in some cases you can plan things in advance. I'm going to give the example of the state tax. The state tax exemption that is currently $13 million for individuals and around $27 for a married couple is going to go back to the 2017 levels with an inflation adjustment. So we're talking about around $5.6 million. And that reduction will not affect you if you use your basic exemption today of $13 million, because there are rules that will prevent the IRS from imposing a tax if you have already used your basic exemption. So that's one possibility where you can plan in advance. There are also some planning ideas that can be considered. In the case of other taxes, it's difficult to know where things are going to end up. So for the time being, I will recommend to keep abreast of developments to see what's going to happen during 2025, and definitely to take action well in advance of 2026.
Okay, great, thank you. And one more question came in. I'll see if I can pronounce this correctly. Can you still use maquiladora?
Maquiladora.
Yeah, sure. Maquiladora in Mexico.
Yes, I mean, there are several maquiladoras in Mexico. They have some stimulus, mostly in the border. You can get a stimulus in the VAT recovered. The funds you can get back that VAT in favor really quickly. Also, Mauricio, there are another stimulus like, I don't know.
Yes, for example, there's you can import things, materials and machinery on a temporary basis, which means you don't have to pay import taxes. There are obviously some restrictions, you need to return it, etc. But you do save some money on taxes, and it's still a valid way of doing business with Mexico. What some companies are doing is they are establishing their own maquiladoras, so they're incorporating a company in Mexico to work as a maquiladora, but it's still owned by them. It's still a subsidiary of themselves. So that's another way.
Okay. I think that is all the questions we have received. If anybody has any additional questions, please shoot them into the chat now. And I just want to ask if you guys have anything else you wanted to add, or if you thought we covered everything, or anything we missed.
Well, I think that people will need to tune in for our next editions.
Absolutely.
Because it's going to be difficult to cover everything.
Yeah.
And as things develop, people need to know. So keep abreast of developments.
Absolutely. Yep. It's an ever-changing landscape, which is why we're hoping to be able to do this webinar series quarterly. So this has been our Beyond Borders webinar series, Decoding the Investment Climate in the US and Mexico. And thank you so much for joining us.
Thank you very
Thank
much.
you.
Thank
Thank
you.
you so much.